Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, now we have Dhwani Patel joining us on the show. Very good afternoon to you, Dhwani. Thank you so much for joining us on ET Now. And the first stock that we're going to talk about is HDFC Bank, Dhwani. How is this one looking on the charts to you, given the fact that we've seen HDFC Bank actually underperform all of its peers, and it has been pretty disappointing. But do you think the tide is going to turn in favor of HDFC Bank going ahead?
Yes, absolutely. What we are seeing today, overall in the index also, we are seeing a breakout coming in on Bank Nifty, where a 45,000 level, which is considered as a psychological level, has also breached over here. And also HDFC Bank, where we were seeing resistance coming in at 1610 level, has given a breakout today. And from here on, we will see a positive upward trajectory following on this stock. From current levels, one can take a short-term bet on it with the target of 1660, keeping a stop loss at 1605.
Okay, surely keeping an eye out on HDFC Bank on those levels over there. But let's move on and talk about Landmark Cars, Ankita. Why is this one in focus today? What's the news for you?
That's correct, Vinny. Landmark Cars is in focus today, and the stock is up 12% in trade. It is currently at the day's highest point. Now, this is happening on the back of this news flow, the fact that they have signed a letter of intent with Mahindra & Mahindra for opening dealership in Howrah, that is in West Bengal. Now, this leadership will be established in one of the wholly owned subsidiaries of Landmark Cars, which is named Landmark Mobility, and this business will include sales and after sales of Mahindra's personal pickup and Supro range of vehicles. And on the back of this news flow, the stock is buzzing in trade.
Okay, let's move on to the next one, and that is Soba. This one is in focus, and why is that so? Because we have a note that is coming from HDFC Institutional, where they're maintaining a buy rating on this one and given a target price of 1,024 rupees per share. They believe that the headwinds now for the company are largely priced in. The risk reward is going to be favorable for a further re-rating. Furthermore, what the note is also highlighting that the group is not averse in terms of scaling up the parent company amongst the top 3 developers in Dubai as well. And other than that, with the regulatory overhang largely behind them, they believe there is a robust financial health for the parent company, and a strong demand undercurrent in the Bangalore market will be something that will be supporting the growth for Soba developers, while obviously that has hit the reset and restart button for Soba in terms of the brand and a huge client loyalty, differentiated designs that are there, and architecture in premium offerings, in-house construction, novelty factor of 15 to 25% on the brand's premium, as well as the valuation, comfort, robust free cash flow generation, and likely deleveraging are the key near-term triggers that will work out for the company in terms of a re-rating. So that's why we're seeing today Soba is buzzing in trade up 13.7% as of now.
All right, moving on, let's talk about railway stock. Yes, they have been the talk of town for a while now. All the railway stocks have been buzzing. But today, the reason why all of them are buzzing in trade is because of a global media house which has reported that a potential deal to connect Gulf and Arab countries via network of railways is underway. What the report is also suggesting is that US President Joe Biden, the leaders of India and Saudi Arabia, as well as UAE, are expected to jointly announce this deal, and it could be announced on Saturday, is what the global agency has informed. So on back of that, you can see RVNL, Titagarh, as well as Ircon International and L&T, all of them seeing actually good gains in today's trading session, as well as RITES, which actually provides consultancy and engineering services for railway projects. That particular counter also is buzzing in trade today, 8% coming in for RITES. So yes, today the railway stocks are buzzing on back of a global media report.
Absolutely, but one stock, Dhwani, you picked out for them. Actually, I believe there are a couple of them. The first one you can talk to us about is RITES in terms of the charts and technical levels. What is your view coming in on RITES then?
Absolutely. What we are seeing over on this chartical structure also, the stocks have already been showing a upward trajectory. RITES in particular has also given a breakout above its previous swing levels. From current level also, one can go long into this particular counter. The trailing stop loss over here that we need to maintain is of 525. We can expect a target of 625 over here on this stock.
All right, moving on then, let's talk about RVNL. Yeah, I actually was trying to read about RVNL stock. Then I realized that actually you can't even sum up the rally that RVNL has put up. Actually seen in the last 6 months of 146% Dhwani, and you think this amount is pretty less for an upside coming in for RVNL? You see some more numbers or digits adding to that?
Absolutely. We've seen a rally coming in this particular counter where from 60s we have seen the stock double up, and then we are seeing further gains coming in on this one. From current level also it is given a breakout above its 144 previous swing high, and from this level one can go long into it. We are expecting a positional target of 200 over here. The stop loss that one needs to maintain is of 140.
Okay, let's move on to the next stock, and that one is in focus. And Ashesha, you're going to talk to us on Ashok Leyland. Why is this one in focus? What's the news flow?
Well, yeah, strong management commentary has come in with respect to its growth plans, because of which the stock is holding up. It is slightly off the day's highest point, but despite that, registering gains of almost 1.5%. The company said that they plan to roll out its entire product range with alternative fuel options. This could happen in the next 3 to 5 years to cater to different set of customers. So positive commentary that has come in with respect to its entire product range. They also say that they plan to grow their international business market. Demand, meanwhile, continues to remain strong. Demand for new range remains robust, both in the domestic market as well as in the export market. They also say that they do not want to be a part of the discounting war in the market, and priority is to make sure that company's full range becomes available in all different fuel types. So in the back of this commentary that has come in with respect to alternative fuels, with respect to demand and plans from here on, the stock is in focus today, off the day's highs but 1.4% higher in trade as we speak.
Alright, we are picking up some updates coming in from wire agency Informis, and as you can see, that's flashing on the bottom of the screen. Remember, the SAT was hearing Puneet Goenka's plea versus the SEBI order. The SEBI order had barred Puneet Goenka from being a director in some of the Z Group companies, also the merged entity as well. So Puneet Goenka went ahead and challenged that particular order at SAT. And now what we're picking up from Informis is the fact that SAT will now again hear the case on September 13th as well as 14th. So right now, today, we were expecting an order to be passed, but they are going to further hear the case on September 13th and 14th. So those 2 days are definitely crucial, and you need to watch out for what sort of an observation as well the SAT will give.
Absolutely. An important update that we'll be waiting out. September 13th and 14th are the dates that you're watching out for here. But let's move on to the next stock then, which is in focus. And Ankita, today you picked up Bharti Airtel for us. And why is this one in focus? What is the news flow that we're picking up here?
That's correct, Vinny. Bharti Airtel is in focus today, and it is on the back of a note that CLSA has come out, and they are maintaining a buy on the particular counter with a target price of 1,100 rupees per share. Now, they feel that there is a strong data subscriber addition that has happened for Bharti Airtel, and also the postpaid subscribers have accelerated, and they see commendable market share gain for Bharti Airtel, and they feel that the stock's highly favorable risk-reward ratio is a big positive, and on the back of that, they are maintaining a buy on this counter. And on the back of that news flow, we can see the reaction coming in on the stock. It is up more than 1.5% in trade today.
Alright, so that is Bharti Airtel for you. Dhwani, coming to you from railway space. Now you're taking a jump to the defense space, another one that has been buzzing. HAL, how is this one looking at the charts to you now?
This is one particular stock that I always recommend to have it in your portfolio. From current levels, we are seeing a fresh breakout coming in on this particular counter. One can add in into the position that they are already holding, or for fresh positions also, the ones who have missed out rally can enter into this stock. One can go long into this one with the current market price, and for our target for 4,500 is next on the chart over here. The stop loss that one needs to maintain over here on this counter is of 4,000.
Okay, keep an eye out on those levels for HAL. A fresh breakout coming in there. That's the word coming in from Dhwani. Let's move on, talk about IDFC First Bank. Why is this one in focus? Because Morgan Stanley had a conference where IDFC was attending the conference, and there were some key highlights and takeaways coming in from the management, where they're saying that the loan growth is healthy across their retail segments, guided at 25% growth for FY25, where they expect the fee income growth to outstrip the overall balance sheet growth of the company as well, and overall guided an improvement in the CI ratio for the next few years. The CET1 ratio stands at 13.7%, and the management looks to further raise capital during FY24 as well. So on the back of that, today we've seen a bit of a buzz coming in the stock, but seems like it's given up those morning gains, as of now seeing a decline of 0.5% in trade.
Alright, that is IDFC First Bank for you, but let's talk about IndusInd Bank, Dhwani, and you think that this chart is similar to that of HDFC Bank. No doubt, at least IndusInd Bank has performed over the last 6 months. That's not been the case with HDFC Bank.
Yes, what we are seeing on IndusInd Bank is a fresh breakout and a confirmation of the same. We are seeing it up in today's session. So from current level, one can go long into this one. There is a positional target over here which extends to 1550. But on a short-term trading bet, also this is a very lucrative stock to enter into. The stop loss over here one needs to maintain is of 1435.
All right, let's talk about a stock today that has hit record high levels once again, and that particular counter is L&T. A short while ago, did tell you that the fact that you have that railway order also, that could be one of the reasons why L&T is buzzing. But apart from that, you also have ICICI Securities that has come up with a note on L&T where they've upgraded the stock now to a buy rating with a target of around 3,141 rupees per share, and that's way substantially higher than where the stock is currently at. You have reports that were indicating that the stock or the company is likely to bag an order win as well. What ICICI Securities is saying is that the company has already announced orders worth about 75,000 crore rupees alone in this year, and it has also said that the orders would mean that the company could report over 20% growth in order inflow in Q2 alone. Also, on back of the order, on likely orders that it is winning, they are expecting the margin improvement in Q4 and FY25 estimates from core business amidst benign raw material prices is what ICICI Securities is saying. Therefore, they've upgraded the stock to a buy rating and given a target surplus of around 3,100.
Okay, that is stock number 23 for you. That is L&T. Keeping an eye on that one. But Bajaj Finserv, Ankita, that one is also up in trade, almost 2% as of now. What is the reason for the gains coming in for Bajaj Finserv?
That's correct, Vinny. Bajaj Finserv is in focus today, and that stock is up almost 2% in trade, as you mentioned, and that is on the back of the fact that the subsidiary Bajaj Allianz General Insurance Company has announced the gross direct premium underwritten for August at 1,677 crores, and the premium in the current financial year up to August at 9,228 crores. Now, the subsidiary Bajaj Allianz Life Insurance Company's total premium for the month of August stood at rupees 926 crores, and the premium at the current financial year, which is FY24, was up to August has been till 3,828 crores, and on the back of this news flow, the stock is up in trade almost 2%.
That's the reason why Bajaj Finserv is buzzing in trade today. But let's talk about Natco Pharma then. Ashesha, why is this one in focus?
This is on the back of a litigation in the United States, which the company has gone ahead and clarified that it is baseless. The stock, of course, is declining in trade today. Bristol, Myers, Squibb and Natco Pharma have been accused in a new lawsuit of using fraudulent patents and other illegal tactics, and this is to maintain its monopoly for a blood cancer drug for years. And the complainant in fact has also said that the company violated US antitrust law and has caused purchasers of the drug to overpay by as much as hundreds of millions of dollars. So on the back of this lawsuit that has been filed against the company, the stock is in focus today. Natco Pharma has clarified, and they said that they believe that this matter is without any merit. Despite that, the stock is declining in trade today, nearly 3% lower as we speak.
Okay, but let's mark the important flashes that are coming in on your screen. The ICRR, which the RBI had actually implemented in at the last meeting. Now, what has happened and what they're deciding is that they've decided to discontinue the ICRR, that's the incremental cash reserve ratio, in a phased manner. And RBI says that the 25% of the ICRR is maintained as of September 9th is the word coming in. We're going to be keeping an eye out on more details of this, but as of now, what we understand that they've decided to discontinue the ICRR in a phased manner. That's the word we are understanding as of now. We'll be understanding more in terms of any updates that we're getting in, but as of now, that's the flashes coming in on your screen. RBI announces this review that was going to be happening today, 8th of September, that said that they will be reviewing this, that whether they need to increase that ICRR for a longer period of time. We had spoken about that as well. So now the incremental cash reserve ratio requirement, that's going to discontinue, but going to be in a phased manner. So let's keep an eye out on that update that is coming in. Also, RBI is furthermore saying, what we're understanding is they're to release 50% of the ICR maintained by 7th of October. They're saying RBI the rest says that the rest of the 50% of ICRR will be maintained to be discontinued on October 7th. So more clarity, more details is what we're waiting out for. But as of now, discontinuing in a phased manner. Let's keep an eye out on that. We'll be getting you more updates on this one. Obviously, look at it coming on a top screen as well. Breaking now because it's an important news. When you remember the RBI meet that had happened, the MPC policy that had happened, that time when the governor actually announced this ICR implementation coming in, we've seen a sharp fall coming in at the Nifty Bank and Nifty PSU banks as well. So let's look at what Nifty Bank is doing as of now as well. If you could pull that up as well, what is the release on that? Look at it's holding on to that, gaining momentum that we've seen, and that is what is happening. But a slight bit of an uptick that we've seen as of now. But the important news and the breaking news is now that they have decided to discontinue this incidental cash reserve ratio in a phased manner. What more is that RBI is saying that this 25% of the ICRR is going to be maintained by September 9th as well. And we're going to be joined by my colleague shortly, Anurag. Ankur will be joining with us shortly. Yes, Ankur is here with us. Ankur, what is this update? Obviously, the review was going to be happening today. This latest update that is coming in, how is it and what is this phased manner that they're indicating, Ankur?
Yes, remember we reported here at ET Now that the ICRR will continue for some time, and hence now Reserve Bank of India has given the release that it is going to be discontinued in phases. This means that on September 9th, that is tomorrow, 25% of ICRR will be maintained, and thereafter 25% will be released further on September 23, and the next phase, the next time period will be October 7, when the remaining 50% of the ICRR needs to be maintained. So Reserve Bank of India is saying that it is not one-time review that the ICRR will go. It is going to be staying for some time. Now this has been done keeping the system liquidity in mind. Remember, the system liquidity was once again positive, and after the review, now Reserve Bank of India has decided that ICRR is going to stay for some time. It is not going to be discontinued immediately. And remember, we spoke to bankers as well, and we were told that due to the system liquidity, ICRR is going to stay, but Reserve Bank of India has given a clear glide path that it will be discontinued, but in phases, and the last date for that is October 7th.
Okay, Ankur, thank you so much for that update coming in, and obviously discontinuing the ICR, but in a phased manner. That's the update that we have gotten in. And obviously in that phased manner, like Ankur was mentioning, 7th October is going to be the last date, but it's all going to be in phases. So yes, they will be discontinuing it in a phased manner. That's the latest update that we have in terms of the ICRR issue from the RBI, and that's the release that we've gotten. But let's move on and keep it going, because yes, okay, banks also, look at them. They've seen an uptick coming in as well. All the banks, whether you see Axis Bank, Kotak Bank, slight bit of an uptick further that we're seeing coming in on the charts as well. So interesting to watch, because when we had seen these banks had seen a sharp fall because of this ICRR. As of now, all the banks are surely seeing a slight bit of an uptick coming in over there. But let's move on and keep it going with the other stocks that are buzzing in trade, and continuing with that. And Dhwani, you've picked up BHEL for us. What is the news flow? I beg your pardon. What is the chart indicating for BHEL? What is the target price you're keeping for BHEL? Last couple of weeks, what a sharp rally we've already seen, right? So now what is it that we're expecting?
From current levels also, we'll see this rally continue upward forwards. The next resistance that we'll see on this particular stock on a positional basis comes around 155 levels. So from current level also, if one goes long, 140 is an ideal stop loss, and the next target over here on charts is coming up as 155.
Right, Dhwani. Okay, let's also, just go to Upasana Bhardwaj. I believe she's joining in with us to understand this ICRR, the discontinuing that is coming in as well in a phased manner. Upasana, very good afternoon, and thank you so much for joining in with us this afternoon. Obviously this release that has come that, now the RBI is saying that they're going to be discontinuing the ICRR in the phased manner. What is the first indication that you are picking up from this? What does it mean for the system as a whole?
See, if we were to look at the entire impact that happened on the system, banking system liquidity because of the ICRR, was somewhere close to 1 lakh crore of withdrawal of liquidity. Now, that is something which RBI has said that will be gradually infused back into the system, but in a very gradual manner, in a phased manner. So I think at the moment what's really happened is that system liquidity overhang which was existing has had then required RBI to act. And now that system liquidity is back in surplus, RBI has probably, that's the reason, taken a measure which is in a gradual manner, because liquidity, while briefly may tighten significantly because of advanced tax outflows and GST outflows in the middle, but towards the end of the month, we again expect liquidity surplus to improve. So keeping all of these factors, in and outflow of liquidity factors, I think RBI may have taken this measure in order to modify it in a phased manner.
Right. And Upasana, modifying it in a phased manner, you're talking about the liquidity as well. So, if you could just give me furthermore in terms of a detail, this phased manner, do you think that will be furthermore supporting, or do you believe that this could have been discontinued immediately as well? What is your understanding of this release that has come?
No, we were not expecting a discontinuation. In fact, we were contemplating whether there will be a retaining of the 10% for another one at least fortnight, and then probably modifying it. Because, like I said, the reasons to manage the liquidity overhang, the reason for this was one was to anchor inflationary expectations, and two, somewhere I believe that the pressure on rupee that was building up, so the shorter end of the curve, the short-term rates had to be remaining elevated. I think these were the two objectives to be maintained, and as a result, we were not expecting the ICRR to be entirely done with. So RBI has provided a guidance in a way, in a phased manner, to ensure that that there's no immediate liquidity infusion coming. All that 1 lakh crore is not expected to come about immediately in the next 2 days or so. Rather, it will be spread out in a 25,000 crore manner per fortnight. That's how they have infused the liquidity like that. So it is not going to be immediate, and hence it should be a much more gradual impact on the short-term rates.
Absolutely. So, gradual impact on the short-term rates. Siddharth Sanyal, Chief Economist at Bandhan, is also joining with us. Siddharth, thank you so much for joining with us this afternoon. What's your first reading on this, the discontinuation of ICRR in a phased manner? What are you picking up from that, and what is your understanding of this?
In the month of August, when it was introduced, there was a situation of somewhat easy liquidity situation. At the same time, inflation was very much elevated. At this moment, the excess liquidity that was there in the system has been largely withdrawn. But at the same time, the inflation prints are yet to come lower. So basically, the inflation print that we are expecting next week, that will still be possibly to the north of 7%. But incrementally, we have got signs that going ahead, inflation print should be much better, providing RBI better comfort. So overall, if you see that in that kind of a backdrop, it gives, there is enough reason to go for the phasing out in a more phased manner rather than at one stroke. And I think RBI has done exactly that. And also, over a period of time, now we are getting a bit of a sense that the rupee is also stabilizing a bit. Overall, the external account deficits, etc., are not too bad. So maybe in the month of October, RBI will be in a much better position to eventually withdraw the ICRR requirements. And by the time, at that time, we'll come much closer to the festival season. So that will not really be impacting the festive season demand also. So overall, I think this is a very, very balanced and prudent move.
Also, we have Indranil Pan, Chief Economist at Yes Bank, also joining in with us. Indranil, very good afternoon to you as well. And, I want to understand in terms of the liquidity overhang that was there, the concern that was there, how is that now shaping up? Do you think this is the right move in terms of the ICRR and, the discontinuation happening in the phased manner?
I think Upasana and Siddharth obviously sort of laid the ground very well, in terms of the fact that I also think that it's the most prudent approach from the Reserve Bank of India. As of yesterday, we still have a liquidity surplus of about 76,000 crores in the Indian economy. Now, I think from a perspective basis, obviously they had clearly indicated that they will be aware and cognizant of the liquidity requirements of the festive season. That is what they are trying to do, and that's the reason why the larger bit of the 50% is for the 7th October and when the whole measure gets unwound. And the smaller bits are in the initial periods of 25% and 25% for September 9th calculation and for the October 23rd calculation. So overall, I think it's a prudent measure. But having said that, for the medium to longer term perspective, this is one other tool that I think the RBI is very clearly indicating to the market can be used to manage liquidity and to take care of any surpluses that build up, either through these FX sources or otherwise.
Yeah. Mr. Siddharth Sanyal, this is Ankur Mishra joining in. I want to ask you clearly, since you keep a track of this liquidity situation in a day-to-day basis as well. Remember, on 21st of August, there was system deficit in liquidity. But however, due to the events, surplus liquidity was restored. Do you think there is a chance in between also that if the situation demands, RBI may review the situation?
I think they already have their estimates. September as a month, for that matter, any quarter-end months are relatively tricky on the liquidity side because you typically see the advanced tax outflows and larger quantum of GST outflows at times. So you have to adjust for those factors. But my sense is that at this moment, the RBI has taken care of those factors in terms of their estimates. I don't really think there will be a situation that they have to change any of the decisions or any of the guidance that they have provided for the next 2 fortnights. And going ahead, my expectation will be that in the month of October, it will be fully withdrawn unless there is any further negative surprise on the inflation front or on the currency front.
Okay, thank you so much, Siddharth, Upasana, as well as Indranil for joining with us, and thank you so much, Ankur, for coming in as well. But with that, viewers, we are very absolutely out of time on this edition of Market Fatafat on ET Now. It's a goodbye from myself, Cheryl, as well as the team who put this show together. But don't go anywhere. Closing trades will take the action forward.